Trump versus Biden, Republicans versus Democrats. The result of the election on the 3rd of November in the world's biggest market, America, is sure to have an impact on your investments. In fact, it's in the top 3 most cited risk factors to global stock valuations, alongside the coronavirus and another tech bubble pop.
We got a taste of the market jitters to come last week when President Trump tested positive for COVID-19. The S&P and the Dow both lost 2% and oil prices slipped further into the abyss.
What the market is hating on here is uncertainty. Stocks don't have a party affiliation. They don't care who the president is. What they like is stability and the right market conditions to grow and thrive.
In this video, we're sketching out what November will likely look like in the stock market under either president, without political bias, and most importantly, how it impacts your money. Let's check it out. Welcome to Unshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
First, we want to give a special shout out to Stake, who are sponsoring this video. Stake is FCA regulated and offers unlimited commission-free trading in real time in over 3,800 US stocks and ETFs.
Stake has fractional investing too, so you can easily afford to buy highly priced stocks. And Stake are giving away a free US stock worth up to $100 to everyone who signs up via our link.
We'll put the link to the offers page in the description below, so be sure to check that out. Anything in this video which might be perceived as a political viewpoint is entirely our own, though we will try to toe the centre line.
How politics shapes stock markets. Politics impacts the stock market in 2 key ways. Firstly, it is a headline-grabbing source of uncertainty, which the market hates above all else. And secondly, the ideologies of those in power affect which laws get passed, which either helps or hinders companies' abilities to make profits for you, the shareholder.
The ideal market conditions for your stocks and ETFs to grow is under a free market with just the right amount of regulation and just the right amount of taxation. Too much or too little of either and you run into problems, but a new president usually tries to make sweeping reforms in the opposite direction of their predecessor.
How investors are thinking. The vast majority of investors, 93%, expect that the result will affect the stock market, according to a recent survey from asset manager Hartford Funds. 84% said that this would impact their investing habits. There is a lot of emotion around this election, understandably given how the culture wars have split the country in 2, and this emotion is leaking over into the stock market.
45% of investors surveyed said they plan to make changes before the election, and 62% indicated they would be waiting to make changes after the fact, once the dust has settled. Who is right?
Uncertainty and volatility. We've already seen buckets of volatility in 2020, which has been fantastic for traders, but perhaps more gut-wrenching on occasion for long-term investors. Here's what winter has penciled in for your portfolios. 3rd of November 2020, the US election. 1st of January 2021, proper Brexit happens with either a deal or a no deal. Probably every week to come, a coronavirus development.
Needless to say, uncertainty is the only thing which is certain. We've discussed before how to invest around COVID, and Brexit is a matter mainly for EU and UK stocks. The upcoming battle which will have the largest predictable effects on US stocks is the election.
If Trump wins again. Major polling outfit 538 were amongst the only pollsters in 2016 to give Trump decent odds of winning, and even they only gave him around a 30% chance. This time around, they again have the Democrat candidate as the most likely to win, but are still giving Trump around a 1 in 5 chance, which isn't zero. And remember how barely any pollsters thought Brexit stood a chance in 2016. If President Trump pulls off a blinder and defies the polls again, here is what we might expect.
Well, the market would probably quite like it. It would mean stability and more of the same. Even industries that may conceivably fare better under a Biden premiership would at least be able to carry on as before with no material changes.
Small cap stocks would likely rally on the news. These are the most likely to be impacted negatively by market volatility, even by the anticipation of market volatility. The fossil energy sector is likely to do well. Relatively speaking, that is, as it's doing pretty poorly right now. Trump's White House is very pro-American oil, while Biden has promised some green energy policies sure to upset the oil companies.
Big tech would also be poised to keep doing well under Trump. While the tech giants have been threatened with tighter regulation under the Trump regime, Biden and the Democrats are expected to take a much firmer hand in what they see as bringing big tech under control. Tech companies are very capable of growing and innovating if left unhindered, so less regulation is a good thing for the shareholders of those stocks.
One thing you can expect from a Trump presidency is a break on global growth overall. His famous America First policy and rhetoric against China is sure to hinder somewhat trade between the East and the West. For shareholders of American stocks, the ones poised to do best under a Trump presidency are the ones with a mostly American presence. Global companies floated in New York will continue to be impacted by the war of words with China.
If Biden and the Democrats win, if Democratic presidential nominee Joe Biden wins, and there's also a Democratic majority in Congress, elections happen there at the same time, then things change bigly. Rapid and wide-ranging economic reforms happen when a new president enters office if they are also backed by their own people in Congress, which is the equivalent of the UK's Parliament. The elections for congressmen and women are also happening on November the 3rd.
Under this scenario, deemed the most likely outcome by the pollsters, the market will probably sell off. Wealth management firm Hightower expect that this could be in the region of around a 4% sell-off, mainly in anticipation of Biden's tax policies. But we wouldn't be surprised if the sell-off were even higher, given the fear in the markets and other elements in play that cause uncertainty, like COVID. Initially, COVID-19 will make it difficult for Biden to ramp up taxes on already struggling companies, and unless there is a vaccine in the early 2021, we expect that these policies will be deferred into 2022. But the spectre of tax rises will hang over the markets and continue the sense of uncertainty about just when exactly the hit will come.
If there is a dip after the election, we will likely buy into it. A result for Biden is a result you can take advantage of. While it is likely the case that your existing stocks will fall in the short term, this isn't an issue for long-term investors. But if we see a big fall on November 3rd, we will be drawing on a chunk of our cash war chest to buy that fall. We won't use it all though, as there is still a possibility of bigger dips in future from COVID.
Specific companies expected to do the worst from a Biden victory include pharmaceutical companies and the FANG stocks: Facebook, Amazon, Apple, Netflix, and Alphabet. Big Pharma is viewed with just as much distrust by Biden's team as Big Tech, with both these sectors likely to take a hit from increased government regulation.
But if there is a Democratic sweep on both the presidency and Congress, sectors like clean energy and industrials could benefit from a new focus on infrastructure. A big part of Biden's playbook is tax and spend, which includes heavy subsidising of the clean energy industry, with renewable energy stocks like Renewable Energy Group set to benefit directly, and some tech companies like Tesla benefiting indirectly from a greater push by government towards battery technologies and so on.
That's not to say that a tax and spend policy is the best way to drive innovation. We tend to favour the free market approach over government subsidy. But we're all for governments using their resources to help technology to advance, if that technology has a practical economic use.
America selects their two greatest fighters. So, of the 330 million citizens of the United States, the two most popular will whittle down from the masses, of which the most qualified will become president. At least we assume this must be how it works. In any case, it's not just about these two champions of the American people. We also have the elections for Congress, which we've already alluded to, which are just as important for how the stock market goes over the next 4 years.
538 and most of the pollsters have a Democrat win in both houses of Congress as being the most likely outcome, but only just. Congress is currently split between both parties, each in charge of one of the two houses.
Stock markets love this because nothing gets done. Remember Trump's wall? It didn't get built because there was a divided Congress. For a president to make any serious changes, it needs to be signed off first by the two houses of Congress. And when the two houses are stuck shouting at each other, nothing gets done, and the market is free to do what it does best: make money.
We had a similar brief period of respite in the UK property investment market during the hung parliament of Theresa May. Any new law for landlords is inevitably a bad one, and my fellow property investors and I were able to enjoy a year or so without government fiddling.
A Biden victory, or even a Trump one, would likely be met by the markets with a shrug of the shoulders if it coincided with the result of the congressional election being another split. For major change to come, America needs all three ducks in a row: the president and the two houses of Congress.
What past elections tell us? Even though the stock market has boomed during President Trump's, a Republican's, first term, it's not to say that it wouldn't boom under a president from a Democrat party either. Dating back to 1933, a Democratic president on average presides over a higher US stock market than a Republican one, despite some of the big hitters being Republicans. But if you strip away some outliers, like the dot-com bust, then there is practically zero difference between the parties in terms of equity returns.
According to Hightower, if you'd put $10,000 into the market around any election day, 10 years later it would have gained value. In this, history tells us that it is wrong not to invest in America just because you don't like the president. History tells us that it is wise to invest in America long term, regardless of the president.
How the market is already positioned. Unlike the pollsters, the market is too uncertain about the result of this election and is proceeding with caution. We've seen investment funds taking money out of tech stocks, those most likely to suffer in the short term from a Democrat victory, and increasing their holdings in cash, points covered in our recent market wrap-up video.
We're positioning ourselves to be ready to buy the dip if there is a sweep by the Democrats, and we are not too heavily weighted towards any of the industries most likely to be impacted by either outcome. It may be time to take profits on some winners if you hold stocks in any of the industries mentioned in this video, unless you're in it for the long haul.
Being undiversified going into this election is a bad idea. Be wary of the sectors most likely to move on either outcome: tech, clean energy, dirty energy, pharma and infrastructure. But a properly diversified long-term portfolio has nothing to fear from this election.
Question of the day: how are you positioning yourself for the election? Let us know in the comments section. Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.